we're diving into an exciting topic, right? How to pay off your bond at a quicker rate to save thousands in interest. If you own a home or you are planning to buy one, this video is a must watch for you. So let's get started. First, let's talk about why you should consider paying off your home loan, right? You should consider paying it much earlier than the normal loan term. The most obvious benefit is the significant savings on the interest. For example, on a 20-year bond, which is quite normal, paying just a little extra each month can knock off years on your repayment period, right? And save you tens of thousands. Plus, owning your home outright gives you freedom, right? Financial freedom and a peace of mind. Imagine you could do what you could do with the extra money, right? So before we can get into that, you first need to understand the practical tips of how to pay your bond at a faster rate. So now let's get into the practical steps you can take to pay off your bond faster. Here are some tried and true methods that have tested over and over again by multiple people, right? So the first one is deposit any available cash upfront, right? So any extra money available, such as a year-end bonuses, can be deposited into your bond account, right? So this reduces the principal balance and lowers the amount of interest you will pay over time, right? So just actually talking about year-end bonuses, there's so many people that year on year they keep on blowing off their bonuses, and they cannot even point on one thing they've done with their bonuses, right? I'm not saying you must not have fun, but just take some portion, allocate it to fun, take some portion, allocate it to your future, right? So that you can actually plan ahead, you can actually see yourself making progress in your life, because so many people, you can't point one thing you've done with your bonus that you get every year, right? The second tip is treat your loan as a savings account. I've made a video on this, right? Treat your home loan as a savings account by adding a little extra money to your monthly bond payment. You can significantly reduce the outstanding capital balance. With excess bond facility, you can deposit extra cash into the loan account and access it if you need it in case of emergencies. If you don't understand what a bond facility is, I have made a video about what bond facility is, right? So I'll also put the link on the description below so that you can actually understand how a excess bond facility works, right? The third point is add raises and bonuses, right? So whenever you receive a raise or a bonus from work, consider adding it into your bond account, right? This extra cash will help shorten the loan time and reduce the interest that is payable. So we've already spoken about a bonus, right? But you might find that maybe you have an increase, right? We have an increase of 1,000, increase of 2,000, increase of 5,000. It doesn't matter. Even if you say, I don't want to use all my increase. Let's say you got an increase of 5,000. You can just allocate and say, the 1,000 from that increase, I'm going to take it and allocate to my home loan. Now, you can still leave off the 4,000, the extra 4,000, and you can also say the 1,000, it doesn't make a difference. You are not planning for that money, right? So it's just proper allocation of money. If you do this, it will help you, right? Number 4, utilize tax return and cashbacks, right? Use the money from your tax returns to make lump sum payments on your bond. This strategy is most effective within the first 10 years of the loan, right? When the repayments are primarily covering the interest. This is very much important to understand that at the beginning of your home loan, you are only paying off the interest. So if you are just paying the bare minimum, you are not doing anything. You are not doing anything to that home loan. That's why you see the balance doesn't change, right? So if you are consciously taking action to ensure that you reduce that balance, then you will see the progress, right? Number 5, rent out a portion of your property. Remember, guys, these are just practical tips that you choose which of these will work for you, right? Some of these might not even work for you, right? But I'm sure, because this is it's a lot of things that I'm talking about, you can just choose what works for you, right? If you have a flat let or an extra space, consider renting it out and using the rental income to pay down your bond. This can significantly accelerate your repayment process, right? Number 6, maintain pre-rate cut repayments, right? This is very much important to understand, because we are now in August, right? And in September, some banks are forecasting that we'll have a property interest rate cut, right? So following the recent rate cuts, keep your repayments at the original amount before the cut. This allows you to pay off your bond faster and save on interest. For example, a 2% reduction in the interest rate can save you thousands if you maintain the higher repayments. What does this mean? What it means is that, for example, now we have the prime lending rate, which is sitting at 11.75%, right? So you are paying, let's say, an installment of 10,000 on your home, on your bond, right? So the interest rate might go down. Let's say it goes down by 0.25% or 0.5%, right? Which will reduce your monthly installment maybe to, let's say, 9.5 thousand. I'm just throwing in figures, don't mind the maths, but just follow the logic. Now, what is advisable for you is to keep paying the 10,000, because now you are paying your installment at a higher rate than what the charged interest is. So this allows you to accelerate the repayment. So because now you already used paying a 10,000, why do you want to go down, right? You're already living like that, so keep it at that, or even go higher if you can, right? Because that will actually help you, right? Number 7, pay bi-weekly instead of monthly, right? This is one of my favorite methods, and I'm currently doing this one. So switching to bi-weekly payments results in one extra payment each year, reducing the loan term significantly, right? So what does this mean? Your interest is charged on a daily basis, right? So if you increase the frequency in which you pay your home loan on a monthly basis, you are actually killing the interest at a much faster rate. So that's very much important to understand, right? Point number 8, use lump sum payments, right? Apply any extra funds like bonuses or extra tax refunds directly into your bond. This goes towards the principal and reduces the interest over time, right? So that, I think we have already covered it. If you have some additional income from somewhere, use that, right? So we already covered this point somewhere else. Number 9, cut unnecessary expenses, right? So many people have this issue that we just like to spend. We just like to spend. But what you must do is just evaluate your budget to cut back on non-essential spending, right? And redirect those savings to additional bond repayments. That will help you. Point number 10, it's not the last, right? Consolidate your debt. If you consolidate all your debts under your home loan, you pay them off at a lower interest, which can help you free up to put towards your bond repayment, right? So people do debt consolidation in a wrong way, right? But the best way to do it, if you have all other kind of debts all around, if you have a credit card there, if you have a personal loan there, if you have whatever that you have, right, and you have some equity in your property, I will advise you to take that equity in your property, because the home loan is the cheapest type of a debt. I also have done a video that says what is the cheapest type of a debt that you will have, right? So you can just also go and watch that video, because it will make you understand different structures of each debt, right? So let's say now you have a personal loan which has a 22% interest, and you have a credit card which has a 25% interest. Now if you consolidate that into your home loan, right? Let's say you take your equity, you pay everything off. Now the interest that you are charging your home loan, if we are talking about the current prime lending rate, would be 11.75. Already you are making a saving there, right? So it's a much better way to consolidate your debt than these other ways that are out there, right? Number 11, savings account strategy, right? Your excess bond account can act as a savings vehicle. Depositing your savings into your bond earns you interest rate at the bank charges on your loan, which is usually higher than the traditional savings account. So that I think on one of the points we are just also repeating to emphasize the point, right? The number 12 thing is to stay informed, right? Keep updated with the property and finance news for opportunities like finance linked individual subsidy program, like which is flips, which can help first time buyers pay off their bonds sooner, right? Also, there's a video I've made about flips and how it works. So it's a good thing to go and refer to that video and understand. Number 13, start with a good credit score. Start with a good credit score. I don't know how many videos I've made of how to improve your credit score to make sure that you have a good credit score, because a good credit score qualifies you for a lower interest, meaning less money spent on interest and more towards the principal. So that's very much important for you to understand. Number 14, be consistent. Keep your bond repayments at the same level even when the interest rate drop. This consistency accelerates your payments. I think I've already explained that, right? So there's more stories of people that eventually have paid off their homes in less time, right? So many of clients have successfully paid off their bonds early by following these strategies, right? So one client, Tabiso, started making monthly buy payments and increased his monthly payments by just 500. He managed to shave off 5 years of the 20-year bond. Now this is saving around 150,000 of interest. So you don't want to be that person, right? Be that person. I challenge you and I dare you to be that person, because when you have done that, it allows you the opportunity to start now creating possibility of wealth, right? You want to be that person who is financially free, right? So, but there's also mistakes that people need to avoid, right? Of course, there are some mistakes to avoid, right? Don't stretch yourself too thin financially. Make sure you have the emergency fund before you start making extra bond payments, right? Also avoid using your bond as a piggy bank. Constantly withdrawing your bond for expenses will negate your efforts to pay it off early, right? So it's very much important for you to have an emergency fund, because now if you don't have an emergency fund, when you know what I'm gonna say, when T happens because this is life, now you're gonna be taking all the time out of your bond, which is not good, right? So you need to have an emergency fund for in case when T happens, then you can actually take from there, right? And then continue with life, right? Because T will always happen. right? So there you have it. Paying off your bond early is definitely achievable with a little discipline and smart financial planning. Remember, every extra payment brings you one step closer to financial freedom. You need to smell that financial freedom from far. If you found this video very helpful, give it a thumbs up, right? And subscribe to the channel for more tips on real estate and personal finances. Always, your host, the big elephant, Ndou Khulu Ya Manenzhe. I will see you on the next one.